Hello, I'm Kevin Martini with the Kevin Martini Group at Gateway D&J Mortgage right here in Raleigh, North Carolina, and this is the Weekly Martini. It's only 16 days until April 1st, and on that date, the FHA is making major changes, and you need to know about it. The FHA is raising the mortgage insurance premium by 10 basis points. That means every month your payment will be more than it is today. Another date to keep on the radar is June 3rd. This is when the mortgage insurance for an FHA loan must be paid for the life of the loan regardless of the loan to value. Check out my blog at kevinmartini.com and seek out the March 12th post titled, Should I Get an Agency Home Loan or an FHA? Now, back to the news. There was good news last week as retail sales increased 0.1% in February. This marked the biggest gain in retail sales numbers in 5 months, and it is at the highest level it's been since 2008. In addition, the National Federation of Independent Businesses reported that its Small Business Confidence Index inched higher in February. Inflation was another key story to note from last week. Remember that inflation is the nemesis to mortgage bonds, and mortgage bonds is where Raleigh mortgage rates live. The Producer Price Index met expectations, showing that inflation at a wholesale level remains tame, and that is good. However, the Consumer Price Index rose 0.7% in February, and that was above expectations. So what does this all mean for Raleigh mortgage rates? Well, good economic reports like the retail sales report means that investors are continuing to move money out of the bonds and into riskier assets like stocks to take advantage of those gains. Today, the Fed continues purchasing $85 billion in bonds every month as part of the bond purchasing program known as quantitative easing. Now, globally, there's some uncertainty, which means investors will likely still see bonds as a safe haven trade. And overall, this should help mortgage bonds and therefore Raleigh mortgage rates, keep them low. But I promise you, they will not be low forever. The bottom line is Raleigh mortgage rates remain near historic levels, meaning that now is a great time to consider a home purchase or refinance. Please let me know if I can answer any questions at all for you. Now, next week, there are a ton of reports, key reports, that we will be monitoring here at the Kevin Martini Group. Check this out. Important housing news will be released on Tuesday with housing starts and building permits. Existing home sales will also be reported on Thursday. In addition, the Federal Reserve will meet for its 2-day meeting on the Federal Open Market Committee, with the monetary policy statement being released on Wednesday. The statement will be dissected for any hints of the current purchase program of mortgage bonds and Treasury securities. If there's any further talk of halting this program this year, it would lead to lower bond prices and pushing Raleigh mortgage rates higher. Always remember, weak economic news normally causes money to flow out of the stocks and into bonds, helping bonds and Raleigh mortgage rates improve, while strong economic news normally has the opposite result. For trusted advice, for great rates, for turbo fast, on-time, stress-free closings, please give me a call, 919-274-3700. My name is Kevin Martini, and thank you for watching. Please share.